Hello everyone, and welcome to this morning's webinar, Forex webinar. Thank you so much for taking the time out to come and join us for the session. But as always, before we start, may I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. As always, we will be looking at the Forex market and the charts through what we call the prism of volume price analysis. That's the intimate relationship between a price action and volume, and some other elements as well that we have incorporated into the methodology that we call VPA. But that's just the sort of technical analysis side. Those of you who have the books, are on our program, or have bought some of our indicators will know that it's also very important to have a look at what's going on with regard to the fundamental news. And boy, it's absolutely chock-a-block today, because although it's the last day of the month, for some items of news, such as the Chinese PMI, for some reason they always come out at the sort of the last day of the month, or maybe is it tomorrow already in China? Maybe that's why it is. I don't know, but this is kind of crossover. But essentially, it's what we call the PMIs, hugely important given the state of the world economy at the moment. And there's a third element. There's a third aspect to how we consider what is going on the charts, and that is we look at related markets for what we call sentiment. And what sentiment is, if I'm going to talk a little bit more about this in our webinar later on. We do another one later, which is more, it is focused on stocks primarily, because sentiment is something. Well, what do you mean by sentiment? And I suppose, and the best analogy is, well, you know, which way is the wind blowing, as it were. But in the financial markets, it boils down to how much risk tolerance is there out there for traders and for investors. Are they basically happy, or are they unhappy? Happy to take on more risk, to put their money into riskier assets, in inverted commas, and that translates into things like commodities and stocks? Or are they feeling very fearful and know they're withdrawing money from these riskier assets and moving them into what is comes under the umbrella of safe havens? And of course, you know, one of the ultimate safe havens, whether you agree from a political or a philosophical point of view, that's by the by, and that is the US dollar. And you know, the performance of the US dollar over the last couple of days has just been extraordinary, and that's also partly to do with sentiment. We'll have a look at that when we come to the charts. Now, all that is encapsulated in the books that are up on Amazon, and for Forex we've actually bundled it up into this little box set. Each of these books carries an element of what I've just been describing. VPA, I think I'm going to do another slide. I'm fed up with this myself, actually. But essentially, it is the foundation method. David's laughing. Methodology. It's a beautiful slide. He spent a long time doing this, choosing all these wonderful colours. So I really mustn't be. Yeah, it's one of the it is actually one of the 7,000 slides that is in our Forex trading program. So if you're a student, you will know what you are having to work through if you're thinking of investing in it. Don't be put off by the fact there are 7,000 slides. Most of them are animated, actually, because we wanted to produce something that is convey quite complex information as simply, as easily as possible. But more important, that it is actually retained, and it's, you know, when you use nice bright colours and images, our brain tends to hold on to information. Right, these are the foundations. I said volume and price. We use candles and candle patterns, and I've got a really nice example that's been going on this morning on the pound New Zealand, and there's all important support and resistance levels, again very much coming into play. They are, you know, that they happen in real time. Support and resistance, it's like volume, it's like price. This is all, whatever you see down here, this is all at the live edge of the market. Now, What we overlay on that, we put on our tools. We put on our standard tools, our moving averages, our Fibonacci, however you want to, you want to give some shape and some geometry to the chart that you are evaluating. We have our own proprietary ones. We've developed the ones really to support this trading methodology, and you will see them on the charts. Do you need the indicators to trade? The answer is no, but they do make life an awful lot easier, particularly when it comes to things like some of the patterns and support and resistance. It just, as I said, it gives geometry to the chart, and you think, aha, that's what I'm looking at. And certainly with VPA, when you're looking at trends, what is a trend? Are you in congestion? Is it a pullback? Is it a correction? These things help. They've been developed for over a number of years. The key is to apply them in the correct market trading environment, and that's where a lot of traders come awry, as it were. And overlaying all this is, of course, time, and that's not just the time of the time chart that you're trading, but also in multiple time frames. If you follow my personal blog, annacooling.com, there you will find analysis primarily on stocks, indices, and commodities, because VPA you can apply to all the markets. And I actually had an email from someone saying that one of the books, the examples book for a VPA, that has a lot of longer time frames, and wanted to know whether it was applicable to shorter ones. And the short answer is yes. It doesn't really matter, because the price cycle it's fractal. The price cycle on a 1 minute chart resembles the price cycle on a monthly chart. You will get, if you take away if you didn't know what the time frame was, they would look, yeah, it's just a cycle. So obviously the difference is, in a month it's going to take a lot longer to evolve and develop. Now, what we've done with regard to the indicators for Forex is we do have these 4 dedicated ones. One of them is the CSI, which tells us where the money is flowing into the individual currencies. Then we have the matrix, which takes the data and pairs it up into which of the pairs is reflecting that either buying or selling most strongly. The array is more of a trend. It's slightly more considered. It's a strength of trend, if there is a trend. Obviously, sometimes there isn't a trend. And the heat map takes all the information and really looks at the 28 pairs across multiple time frames. We think it is a unique indicator, in as much we haven't come across anything quite like this before. I'll get David to describe it in a little bit more detail as we go along. If you've got any questions on anything I mention or David mentions, then just drop them into the chat box, or you can email me, Anna at annacooling.com, or David at quantumtrading.com. Now, as always, let's just quickly start to see what the state of the market is. Now, the state of the market, what can we say about the market? Well, it's certainly been a bit of a roller coaster. I suppose that's the one way of looking at it. Now, for traders, as I've said in my posts, and I've said on my various Facebook pages, as traders, it's great, because that's what we want. There's nothing worse if you are looking to take some pips out of this market on a daily basis or on a regular basis, and things are not moving, and there is no volatility, and there is no roller coaster, because boy, oh boy, that's when you get frustrated. Well, that's when you get bored. You think, oh God, nothing is happening. You start hunting. Oh, I think I'll go in here, and that is really not good. Now, for investors, it's a bit of a scary time. We've been saying all along that markets are due markets correct all the time. The two factors are, when are they going to correct, and the extent of that correction. Now, so far, the corrections haven't been what we call the big short. Is there a big short coming? There is always a big short coming. We don't believe that it is this in this period. Does it mean that markets are just now going to settle back and then carry on soaring higher, as we've seen over the certainly since March, April last year, after the big sell-off after the pandemic? but the short answer is probably no. You know, things are not looking particularly good, and we only have to read general media to know that things are not, you know, there are issues. There are some very serious problems. There's, you know, I will list, you know, very quickly. There's the fears about inflation. There's what else is there? There's what we call the supply chain. There's you know, there are shortages, and these are not going to be resolved quickly. There's probably an energy crisis coming. You know, one could go on and on. America running out of money. There's the debt ceiling in the States. So, you know, when we're trading as traders, we have to be aware of the broader landscape, and there are always what you might call threats. There's things out there which could upend this market, or you know, send investors, and particularly investors, fleeing for the hills. As Forex traders, as I said, it may sound cynical, it may sound harsh, but really, not that we don't care. Of course we care, because this can affect us personally. It's all reflected in the currencies, in the individual currencies and the currency pairs. So being aware of what's going on in this, on this landscape, will, you know, it will be of a benefit to you. And this is something that we cover in great detail, as I said, in the Forex program. Right, as I said earlier, let me just bring some charts up quickly. Let me just finish. Fundamental news, right, my 3 calendars. Where am I? My Forex factory. I always have 3 calendars. Here we are. You can see it doesn't look, you know, hugely full, but there's well, where are we? Today, yes, 30th, right. And we've got Mr. Powell speaking at 3 o'clock, if that weren't enough. This is quite deceptive, because there are some quite important releases coming along later on, but it gives you an example of, you know, if Forex Factory is all you use, fine, but be aware that it is not comprehensive. I think it's, you know, they take the view that, you know, this is what's likely to move the markets, and it does. It's fine, it's great, and they give this, you know, this sort of color coded in terms of potential impact. Of course, anything that, you know, when the Fed chair speaks, of course the market is going to pay attention. But the ones I want to just you to keep an eye, just to be refer to, that I want to refer to, is when I said about these PMIs, and this was the Chinese one, this was the manufacturing one, the non-manufacturing one, and the CASIN. Now, they don't give it a particularly high impact, which I think is, personally, I think is I wouldn't do that. If I were preparing a calendar, I would give this a much higher impact. Now, the issue with Chinese data is this, and it always has been, is you can't, you know, the market knows that the data is manipulated. There are issues in China, the threats I said earlier on. China is a huge one, not just for what's the real estate problems that they have, in the sense that you may have heard of Evergrande, which is like a big real estate company. It's got so much debt, it's borrowed so much money to build what they call ghost cities, and, you know, and selling these apartments on to investors, etc. It's almost a bit like the subprime back in 2008. A most staggering piece of information that I learned about China is that I think 750 million people there, of their population, subsist on less than $2 a day. So it's, you know, it's full of contradictions. Anyway, so get back to this data. Fine, it is what it is. The market will react to what they, you know, to what they're given. It's, you know, one of the ways that markets try and make sense of whether that was a realistic number or not is they would look at the sort of on Google Earth and what they would try and calculate what the energy consumption was for China and say, well, actually, you're consuming this energy, and you're saying your figures are fantastic, but actually the two don't quite sort of marry, as it were. However, there is an energy crisis in China as well, and China has the ability to really cause huge problems for the global economy, because it makes everything. And they are, I think there are, the factory production is they're cutting down on they're just closing them for a period of time. Now, some of it's wrapped up with the global climate issue. They say no, we're doing our bit to clean up the environment, fine, but all these things will play further down the line, and as I said, that will all feed into what happens in the broader markets. Now, that was that. The other piece of data that I want to refer to is actually this one for the New Zealand, because I said earlier that the dollar has just been absolutely taking off, just going ballistic, and the New Zealand dollar has really kind of borne the brunt of it. And when we look at the charts, what I wrote on my Facebook page is that the New Zealand was so heavily oversold overnight. And I posed the questions, as it was so oversold, was the fundamental data going to give it a bit of a boost? And in fact, it did. And it was a really nice example of how, you see something on a chart, you look at what is happening on the fundamental side. Is that piece of news, especially when a currency is overbought or oversold? I use the hourly chart because that's the one where you're going to see that without too much noise on it. And it was so oversold, and it did have an impact. And we have it's nice to have this confluence of technical, fundamental, and also because New Zealand is a commodity dollar and is very sensitive, like Aussie, to sentiment. There's also been an uptick in the indices. After this huge sell-off that they've had, that also benefited. And so you look at your chart, you look at the fundamentals, you look at the sentiment, you think, do you know what? That is probably, the probability is that something is going to be positive for that particular currency, and so it came to pass. And I'll show you on the charts. Also look at Financial Juice to see what they come up with. And as I said, the one thing that is not on the Forex Factory calendar is the PCE. Inflation is all about inflation. What type of inflation? Normal inflation, stagflation, deflation. We could do a whole a webinar on inflation and how that impacts the different assets of in the markets. We're going to cover it a little bit more this afternoon because it's probably more to do with stocks, which sectors benefit in these different inflationary environments, as it were. So then we go over to trading economics, which is a very comprehensive calendar, and you've got the option to add in. These are all the countries you can add in. I don't have all the countries. I just cover the ones of these 7 major currencies that we follow. And you can see here immediately that the impact that is given to these releases by trading economics is very different from Forex Factory. And I do urge you, this is free, so you don't have to pay for it, obviously. I've probably got a little bit more than you would actually need. I've got some of the individual European countries. Germany certainly is key. Maybe Italian, fine, interesting, but maybe I can, and the German ones. But look at what's happening in the US. There's much more given here, and where you've got this bold, then that is really going to have an impact on it. Now, what's interesting, what's happening here? There's a Mr. Wise, I've got that one. And you will find there are inconsistencies. People forget to put important items of news. Right, that's what I want to cover there. What I was going to say, back to the dollar. There we are. Let me just go on to my matrix profile. Here we are. Okay. What we have here is the daily chart of the dollar index. It's not the futures one. I've actually pulled up, this is one of my live accounts, and I had a quick look at it. It's from Sync Markets, and I hadn't really checked the what they offer in terms of instruments, and I was actually quite pleasantly surprised, because, as I said, I just use it, and I have what I want, and I don't really go into market watch very often. I've got no reason to, and I was using XM, a demo account, for these sessions because they offered the dollar index. So I thought, oh, okay, because I was setting it up again. I thought, on another computer, let me just see what they have. And I must say, I don't actually remember this since the last time I looked. They offer a very, very comprehensive cross section of markets. Obviously, you've got lots and lots of different currency pairs. You've got gold, silver. I've got WTI, Brent. We've got copper. We write about copper. Those, I don't know what those are. I think those different contracts that they offer. But coming down here, they have a really, really nice cross section of the different markets. You've got the ones we look at are the Nasdaq, the S&P, the Dow Jones, and this one now. This is the Russell 2000. This is an index. I'm talking about sentiment, where it's very, very speculative, this index. It's where investors are always looking for the next Apple, the next Facebook. So being speculative, there are sort of what are called pink sheets, shares that's very small, don't cost a lot of money, very volatile, but could potentially turn into, as I said, the next Apple, the next Facebook. So highly speculative. People put their money into speculative things when they're confident, when they think they're taking on more. This is all about risk. They're taking on risk, and that is the one that they will certainly look at. Then I saw had the dollar index, and lo and behold, I've never seen this before on an MT4 platform. I've actually got access to the VIX, which is absolutely fantastic. It's, normally you'd have to pay for it. Obviously, it's the futures, but the VIX is your sentiment barometer, as it were. And what I was also pleased about, I'm not going to look at them so much, is they have all these cryptos, which is fantastic. Cryptos is, something that is it is coming. Whatever your personal views about the cryptocurrency market, they're there. They're a reality, and they're only set to increase, as it were. And then I have all sorts of stocks from the different exchanges. I tend to stick to, as I said, the US one. Right, just wanted to show you that because it's absolutely brilliant. I said this is on the live account. I have no idea if this is what you would get if you just opened a demo account. You would have to explore that for yourself. Right, looking back to, where are we? Yes, the New Zealand took a real battering yesterday. This is the dollar, hugely overbought, hugely oversold, certainly against the New Zealand dollar. As I said, you can read more about it on my Facebook page. Looking at the dollar index, this is on the daily chart. We can see here, it's absolutely blasted through these levels on here from the Camarilla. These are weekly levels, but they've just gone. They've just disappeared. The surge, you can see the amount of the volume that's gone into these two candles. The only thing I noted yesterday is the range of this candle compared with that volume is the same volume on that range, and that is a little bit anomalous, because you would think, well, if it moved that much with that volume, then moving that much, you would expect that to be a little bit more. It's not. It's the same. I wouldn't say it's less, but it's more or less the same. So what would you expect? We'd expect at least that this is not going to, today immediately carry on blasting higher. Now, to get back to levels, because obviously these levels are really, really important, when the weekly ones are taken out, they then become the support levels if there is going to be a correction or a pullback. But I think, quite frankly, they're so far away, unless something, you know, truly dramatic happens between now and tomorrow, I think. And also it's end of month. There's also quite a lot of dollar buying at end of month. It's portfolios and fund managers. It's just the time of the month when you do tend to get a bit of dollar strength. So what you do is we go down to the hourly, no, not the hourly, we go down to the 15-minute chart. Let's have a look. Let's pull this down. There we are. Oh, what's happened here? Let's have a look. Oh, let me just put the template back on. No, here we are. There we are. Right. These get refreshed every day, every 24 hours. And what we actually see, let's go up to the 30-minute chart here. That's better. The key levels are, the dollar is actually, after this massive move higher, as we've seen on the daily, is actually in a consolidation phase. It's between the S1. If it rises higher and it's then stuck between the S1 and R1, that's what we call the buffer zone. It's kind of not really going very far, as it were. It's just moving sideways. So it's probably waiting for some more data this afternoon. As I said, it's end of month. We've got Powell speaking later, but the key levels are the S3, the third levels, followed by the fourth levels. We've actually got 6 levels here. So it's a case of waiting to see what happens, but it does seem a little bit in the doldrums, and we can see that it's in the doldrums on the hour, because it's moving. You know, we haven't got any, there's no direction for the US dollar. It's moving sideways, basically. The New Zealand, having had a bit of an uplift from overnight, it was on the Chinese news was okay, was better in some instances than others. Aussie and New Zealand always react to Chinese news. If it's good, you will find that they will rise, and the indices have risen as well. But it doesn't look as though that's going to hold. The pound has also had a little bit of an uptick. But what I wanted to cover is just very briefly why. So the question is, why has the dollar suddenly shot up in the way that it has? Partly it is, I'm saying, the ultimate safe haven. It is next to treasuries, and it's also to do with bond yields, and to do with inflation, and also to what they call the real yields, and that is that inflation is actually probably a lot worse than is being reflected in some of the data. You and I know that inflation is bad. We've been talking about this for months. You only have to go to your shops, you only have to fill up your car, you only have to look at the services that you're charged, and we've got huge inflation now in our energy costs as well. So we know, you know, there is inflation. Now, it's not the right kind of inflation, according to the central banks, but you know, some of the research that they have done, it is not looking very, very good. Allied to that, you also have the Fed, who probably will do the wrong thing will do the right thing at the wrong time, and that is this tapering. It's attempted to do it before, and the market had a bit of a tantrum, so it carried on with this kind of easy money. Now it might have to. Markets, you know, that's it. It will do the right thing, and it will do it at the wrong time, and that's probably a good example for most of the central banks, isn't it, David? We always do the right, maybe that's all of us, we do the right thing, but we don't do it when we're supposed to be doing it. So you kind of got a hawkish Fed. And the last one, which I haven't mentioned before, on a political side, is the dollar does tend to do better under a democratic administration. It's just one of those little quirks. If you only have to look back at the longer term charts, and when the Democrats are in, it does tend to strengthen, but it is actually being supported by some very clear fundamental metrics, as it were. So you know, that's just something to bear in mind. And also, when the dollar does weaken, that helps the stocks, risky assets, just the stocks. Now you say, well, stocks are rising, the indices are rising. It's more of a bounce. It's you know, is it a dead cat bounce? We don't know. Sorry if some of you are like cats. We love cats as well, but it's just one of these sayings that the market has, you know, to explain that, you know, a correction, you know, this bounce that we're having, is it actually going to Is it going to be is it substantial enough, and is it going to be maintained? Right. Back to the New Zealand. Right, okay, let me see. I've got 3 New Zealand pairs I just want to look at to show you the difference of what happens, because the thing is, you know, we've talked about this is what's happened to the New Zealand. We could see that it was sold off, then it had a little bit of a bounce, but it looks like it's going to, you know, carry on lower. And so if you've missed the first move, this was the big moves in the New Zealand yesterday was against the dollar, as I said, against the yen, because markets were, you know, falling out of bed again. This was that huge fall, and you say, well, okay, I either want to join, or am I going to see a reversal? Because there's as a trader, you either have to join an existing trend. Some people will say you should never do that, you should always wait for a reversal. Well, if you look at some of the indices and some of the trends that we've seen in some of the stocks, you're going to wait forever. So what you have to do is you say, well, I'm going to wait for a pullback, a correction, and this is where VPA comes in, because what VPA will confirm is whether that correction or pullback is that, or in fact it is a reversal. And if you understand primary trends, secondary trends, and you understand this relationship between the price action and the volume, you will never, you know, you will have that clarity, and you'll say, yeah. And then you look at support and resistance. Is it at, you know, how is that impacting? Because sometimes when it happens at a key level, and said our key levels are determined by price, volume, and the Camarilla comes under price, you may wish to say, well, okay, let me see if that breaks and what have you. Right, so we've seen the New Zealand on the CSI, on the hourly, it has actually turned up. I know it's kind of moving back down again, but let's see it. But the reversal on, certainly on the New Zealand dollar, really hasn't taken it very far. It's simply moved it into a congestion phase. And the question now is the New Zealand, and this is on the daily, as we can see here, what have we had? This was yesterday, this was the day before, this was yesterday. If we look at the volume under there is actually a little bit higher than this one. It went through the S4. It's actually coming up to, it got to what we call the volume support on the volume derived from the volume point of control. The volume point of control is that area of the chart where it's fair value, it's where traders are happy to transact. There's no clear direction, and we can see here. Then there was an attempt to break away, which is quite a nice move, before it then reversed high and actually went straight through the volume point of control. So we almost got a V-shaped price action. But if you look back, you can see here it was oscillating. Now this is the daily chart. Would there have been trading opportunities in these big candles on the faster time frames? The short answer is yes, of course there are. This is actually quite a nice consolidation. There's not a lot of volatility. There's not a lot of volatility candles. There are spiky candles, but they're not massive ones. So that's why the volume point of control, the histogram there, is sitting there, because it was this area where there wasn't a clear direction. Now we've actually had a break. With the surge in the US dollar, we had the break away from the volume point of control, plus it came away from the S3 level straight through the S4, and it was supported by volume as well. This is the attempt to move higher, but you see we have a wick to the top of the candle, so there is still weakness here. So if you've missed what's going on, what happened yesterday, and we think there's more downside to come, this is where you simply have to wait. Now on the hourly chart, it's probably more descriptive. You can see that the step down, it moves down into consolidation. Around the VPOC again, then you have this break lower, you have lots of volume coming in. We actually had a volatility candle there, a retrace. Then you look at the time and you think, my goodness, this is just before the rollover. This was the slight bump higher that the New Zealand got from the slightly better with some New Zealand data as well. Some confidence data came in better, and the Chinese data. The New Zealand dollar would probably not react as strongly as some of the other New Zealand pairs, but essentially it is still in this consolidation. Now, if this carries on in consolidation, just moving sideways, the VPOC will simply move down because this shaded area will stretch further across to the left. So although the New Zealand, we could see the New Zealand was turning up, in this particular pair, the move, we've got to wait. So we look at the Renko. The Renko is telling us, and so any re-entry to the downside, which all looks a little bit, it all looks a bit unhappy, this particular pair, really is a case of being patient. Now, while I said about when something is in congestion, now if you could take the hourly chart in your congestion, this is the hour, and there you have this down candle here. Now, if you're right down at the tick level, or you're trading seconds charts, you may have taken, a very, very, very fast scalp trade in this in this candle. Possibly this one as well, but you'd have to be very quick. And when you are trading something that is in a congestion, it is possible to trade on another time frame, but the risk on that trade is potentially going to be that much higher. So this has been a little bit of not a dead duck. It's one where we have to be patient. Now, the other one I said that had a really nice move was the New Zealand yen. There we are, and let's have a look what this one is doing. And it's pretty much looks like the New Zealand dollar. So if if those are the only two New Zealand pairs you had, you're going to have to be patient. If we look at the Renko, I've actually moved this to 2.5 pips. I was using 3 on XM, but I've got 2.5 here. You are going to get more choppiness, if you like, coming out, because you don't have such smoother, so much smoothing in the Renko. I might move it to 3. I think 2.5 might be a little bit too fast, as it were. And we have the same here. We've had the New Zealand attempting to rise, reflecting. Don't forget, the New Zealand yen is now very much part of the yen pairs that is going to be impacted by what is going on in the broader market on the indices. But it pretty much looks like, what's been it hasn't really, these two pairs haven't really reflected that really nice little bump higher in the New Zealand that we saw on the CSI. So therefore you say, well, where is this New Zealand being bought? And in fact, it was on the pound New Zealand. It's a cross pair, which sometimes happen. Now look at the difference on the this is still the New Zealand. We know that it was being bought. I have the CSI here as well. This is on the 5-minute the 5-minute chart. It's gone all over the place at the moment. Let's move over to the 30-minute chart. And what you sorry about that. Right. What you do with this, both the CSI and the matrix is, as I said, you see something being bought, either bought strongly or sold strongly. And what you can do on the matrix is highlight that particular currency, and it will tell you where do you have a consistency of flow of that currency into all the pairs, and then you'll spot for choice into which one you want to have a look at. With the New Zealand, it wasn't quite like that. It was, because I said, it was all over the place. But the one that did stand out was the pound New Zealand. And if you look at the shape of, certainly of the Renko, that tells you immediately, we've actually had like a V-shaped reaction in this particular pair, which came in about 8:45 this morning. And this is where you kind of begin to put it all together. I had an email from, that was on Twitter, I think. Somebody said, "Oh, I've got all your books, great things, but I want the perfect entry. Where is my perfect entry?" Well, there isn't a perfect entry. There are factors that you can put into your decision making for an entry, but nothing is. It's almost as if, and anybody who asks me that question says, "I want the perfect entry." This is not for you, because this is discretionary trading. That person wants absolute certainty and wants a system, wants a systematic approach, because in a systematic approach, you write the rules and you leave it to your EA and your robot to do it. And then if it goes wrong, you blame that. Discretionary is exactly what it is. VPA is a system, but you operate it in a discretionary way. So there we are. As I said, we could see the New Zealand being bought. The trend monitor hadn't transitioned yet, but just looking at the 5-minute chart, what do we have here? We have the break from the volume point of control. You've got sort of fair amount of selling here, but you know, what have you got underneath here? I hope you can see it. You've got a really nice candle with a wick to the bottom of the candle. So that tells you that buying is already coming in to this, you know, to this move lower. Then you have, I know you have a candle with a wick to the top, but getting back to support and resistance, it stops dead on the S3. The S3 is so important, and it stops on this volume line here, the outermost reach of the VPOC. Then you get a bullish engulfing candle, and you think, so how many signals have you got? You've got three actually. You've got two price-based support levels, and you've got a volume, and you have a really nice candle pattern, and it was also coming up on the matrix and the CSI, and you say, right, what does that tell you? Does that tell you to jump in? No, it tells you, it puts you on alert. It says, right, okay, well that looks promising, because that's about as much as you can say at this point. Then you look at the you've got the 15-minute chart. You've got practically the same pattern. You've had a long period of consolidation. You've had, see how many times it attempted to break away, and you have, you know, this is why a lot of traders don't like trading breakaways, because you have a lot of fake outs. And I put my hand up and I say, yes, that's true. But there is an advantage, is where your stop loss is. You keep very tight stops with breakaways. So you're in, okay, if you're out, you're out. But when you do get a break, you know, that was a perfectly, perfectly traded one. But you get but looking at the 5-minute chart, you got the reversal. You have the 2-bar reversal here, and up it goes. I've got the volume also. Let's have a look. Just bring that. Yep, you've got a lot of volume coming under that candle there. You have, now looking at these, you've got the volume also falling away on these 3 candles. You've got 1, 2, 3. You've got nice volume under that, but there's less under that one, and it's falling away. Not by huge, but it's enough to tell you that possibly this is going to be another one of those moves. But it was a half decent move on the 15-minute chart. But the key is it stops at support and resistance. Support and resistance, I cannot emphasize it enough. Now, so that tells you that. That is then replicated on the Renko chart. It's you see that this is the V shape, but we don't have what I call the entrance. The potential entrance on Renko is based on an agreement between the trend dot, which we have here, and the trend monitor. So yes, you would have missed that little bit of the trend, but look what you get in return. And with regard to where this, where you come out because of exit, you've got your entry is almost the easy bit. Staying in is hard, which is what the Renko does, and then coming out here, I would use, go back to the time chart, and here I would use looking at the support and resistance. As I said, the 3rd level, it did actually go through, it did, but it hit the volume. This is a fantastic move in under any, I don't care what it is. This is a really nice, smooth move. But compare it to what we saw in the New Zealand dollar and New Zealand yen. So yes, there was buying in New Zealand, but it was not in the 2 pairs that I thought from yesterday would carry on following, maybe there'd be a chance for a re-entry. Does that mean the other 2? What do you do about the other 2? Patience. I will see what happens when New York comes on board, because this has had this move. Chances are it may just stop from here on in. Right, I've spoken long enough. I will pass over to David.
Hi everybody, hopefully you can hear me okay. Hopefully you can see my screen. Can you, darling, sorry, can you just double check? Can you hear me? No?
Oh yes, I can. Yes,
yeah, yes. Can you hear me okay?
Yeah.
Okay. Hello, hello, hello. I am speaking.
Yeah.
Great stuff. Okay, hopefully you can all hear me too. All good, great, thanks Christopher, thanks Malcolm. Just move that out of the way. I actually want to focus on cable for several different reasons. I'm just debating where to start. This is on NinjaTrader. I'm sure you recognize it now. I've got the CSI over here on 10 minute, and I've got the 15 second, 1 minute, 3 minute, 5 minute, 10 minute, and the daily. Let's start. Let me start on the daily because we spend an awful lot of time on the faster charts, intraday scalping, and everything else. But as Anna mentioned, levels, support and resistance are equally important, whatever time frame you're trading. And the daily chart for cable is just a classic example of this. These levels on here are delivered automatically from the accumulation distribution indicator. What it does is essentially it prints these as thicker levels where they are stronger and thinner where they are weaker. So you get a complete visual picture. Doesn't matter what the time frame is, but I happen to go to the daily because it just gives you context. As I say, we all focus on the faster time frames, intraday trading, scalping, all the rest of it, but the daily chart will give you further context in terms of levels from a price-based perspective and also from a volume-based perspective too. It doesn't take a genius to work out, where the resistance is strongest up here at just below 142. Just move this out of the way. There we go. It's also up at the top of the volume point of control, which is often a place these areas do occur. So be aware of that. And obviously what we have to do if we were at that level, and I'll show you on a slower time frame chart, a faster time frame chart rather, you just literally got to move down to the next level or move down to the weekly on this in a minute. But this is just a classic example. What you've also got here is look at the comparison in volume that we've got, and bear in mind that June, July, August, this volume in here theoretically should be like this, for example, because of seasonality. You always expect volume to be, generally speaking, lower in the summer months as opposed to either side of it the rest of the year. On this occasion, we've actually got a lot of volume going in here. The market is absolutely going nowhere. So big volume going in here and the market's gone nowhere. We've got this resistance building over here, very strong resistance at the top of the chart, and down we go. We come all the way down to the V part, we go through the V part, we try and rally, and then you've got a classic example of volume falling, the market's rallying. Now, obviously, from an intraday perspective, fine, you're going to be trading this, you're going to be trading long. We get up to this level here, very strong level of resistance at that point, actually broke through there, okay, fine. But the volume is falling away all the time, so it's just giving you indications of what to perhaps expect longer term. And whether you're an intraday trader or a longer term swing or trend trader, it's just information. Then you get some minor levels here, a little 2-bar reversal there, but we get quite a few of those back down to volume point of control. Then we get the same sort of thing here, and now we're starting to hit this level on the daily. We've come back up to the volume point of control. We expect to see congestion. We expect to see the market pause at that level, which it does. It goes into congestion. Lots of weakness there. Wicks to the upper body. Wick. We've only got one to the lower body. We've got a very strong area of obviously price-based resistance. This guy here, this thick line, which is obviously going to come into play at that point. And in addition to that, obviously we've got a huge amount of volume sitting around the volume point of control itself, which is the highest, the greatest level of volume that you expect to see on the chart. And then off we go, down we go, and over the last couple of days, we've had this very strong surge in the dollar. Nice widespread candle, day before yesterday, lots of volume, decent volume under that one as well. Narrower spread, so the volume's fallen away a little bit, absolutely fine, nothing wrong with that. But now we're coming back down to the extreme of the volume point of control. So we want to see, where are we going next? In which case we go up to the weekly. Let's go up to the weekly time frame. There we go. Gives us a completely different perspective, gives us more information. It gives us different levels to look at. Obviously, we've been around the VPOC just below 138 for an awful long time now. This is potentially, and I do stress it, potentially shaping up to further strengthen the dollar and further weakness in cable. We've got a low volume node here, which is just below 134 down at this region here. So if this price level is breached and holds below this level on the week, then potentially there is a significant opportunity for this to fall further through this low volume node. Where's the next stopping point? Well, from a volume based perspective, we've got volume building down here. So, potentially down sort of 132 area. And then we start to run into quite a significant amount of price-based potential support down at this level, very strong level down here at 128. What you're also seeing on the weekly time frame is you're starting to see volume building. I've got the volume switched off on this particular candle, so it's not filling in on a tick-by-tick basis. It will fill in at the close at the end of the week, in other words. So it'll be interesting to see how this shapes up and what we'd be looking for in terms of confirmation. Obviously, assuming this candle closes as a decent widespread candle and doesn't develop wicks, which is entirely possible today and tomorrow, could see some strong buying coming in. But if it closes anything like this or better with some higher volume under here, then again, it's just confirming the general weakness of the pair at present on this particular time frame. And of course, the trend monitor is also signaling that now. We've come out of the bullish into the changing color. We didn't go into dark red, we've gone straight into bright red, bearish. So that is where we're shaping up. But once again, look at the volume across the time. This is 2021, so this is 20, so this is a year ago. Big surge in volume here. But the actual volumes here over here are actually relatively light when compared with the volumes over here. So it's just something to be aware of. But you've moved up to a much slower time frame chart, and it's just giving you a different perspective. And it's exactly the same principle you would apply if you were on a 1 minute, you go up to 3 minute or 5 minute, 5 minute, 10 minute, etc., etc., etc. The principles are identical, exactly the same. But the point I'm making is don't ignore the daily chart if you are an intraday trader. Let's just change that back to the daily. There we go. So yeah, we're seeing a little bit of a bounce today. No great surprise, because you'll get an awful lot of traders who will buy purely on the fact that the market has sold off strongly, and therefore they will be buying dips. It's a fact. That's what happens. There are an awful lot of traders out there who will do that, and their trading is premised on that sole factor. But the general sentiment towards cable and is bearish. The general sentiment towards the dollar at the moment is pretty positive, and it's been beaten down for a long time. Now, in terms of intraday, yes, there was a little rally earlier on. You can see it over here. This is pound is the yellow line on the currency strength indicator, but it was pretty much in isolation. I'll show you that in a minute. So yes, it was a tradable move, but it was in the context of two factors. First of all, the context of the general bearish nature of the chart per se. But secondly, as I'll show you, it's moved on a little bit since Anna started, when it was very, very clear. But at that point, cable was the only major that was moving higher. All the others, were moving lower. So it was completely out of lockstep. Yes, it's a tradable opportunity, but the risk is that much higher. And it's one of the factors that you've got to be aware of in trading a complex is, am I trading with a particular move that is against the general flow? In other words, the river, the torrent of the market, is it all buying or selling of the dollar? Because if the one I'm trading is against that flow and I'm paddling my canoe against it, as indeed we were here, it's absolutely fine as long as you realize what you're doing and that the risk on that trade is that much higher. The defining moment for this, if you like, came on the 5-minute where we had the volatility trigger. And if I've said this once, I must have said it 1,000 times. If you're in a trade and you've got some decent profit in there and you get a volatility on a slower time frame or one that's close to the one you are trading, close out. If you've got multiple contracts, fine. Take the majority of them off the table, leave one. If you've got 3, take 2 off, leave 1. Or you just close the whole lot out and sit and wait, because one of 3 things will happen. The volatility candle may be ignored completely, in which case all you've lost is maybe a few pips or a few points as the market continues higher. It may trigger another one, who knows? So that's all you've lost on that occasion. So yes, it may well continue on, but generally speaking, what you're looking for is exactly what's happened here, is you're looking for either congestion or a full-blown reversal. And from congestion, obviously, you can get a full-blown reversal anyway. So the chances are, do you want to sit through congestion? Generally speaking, you don't. It's pretty painful and tedious. And what will happen ultimately is you'll close out through fear of losing what you've got anyway. So the chances are you'll give some of it back to the market and close out with a much smaller profit anyway. If you want to sit through it, fine, that's up to you, but I'm suggesting you don't. This is the defining moment, the volatility candle. We didn't have one on the 10-minute, I don't think. No, we didn't. We had it on 5. And this is another reason for using multiple time frames. It's absolutely crucial you use multiple time frames. Whatever it is you're doing, whether you're on the daily, weekly, monthly, or the 1, 2, 3 minute, 15 second, doesn't matter. There are also other signals very clear on this. We saw the volume come in here. That was the volume under the, where are we? There we go. That's the volume under this candle. Fine. Okay, we've got a volatility trigger. Then we get a doji candle. Okay, indecisions, what we expect anyway. Then we get this guy here, lots of volume, good volume under here. I mean, look at it compared with, this is the open. So we've got a decent amount of volume under here. Is this strong or weak? It's weak. That's fine. Down we go. Now we've got another volatility candle, and as I said, it doesn't always follow. If you're now short and you've closed out with some profit on this down move, absolutely fine. What have you lost? Well, okay, fine. You can wait for this candle to close out, or you'd be down on the faster candles, and you could jump back in again. I wouldn't suggest you do, because you're now coming down to volume point of control. We're expecting the market to congest anyway, so it's not exactly a great opportunity. But just to make the point. And as you can see here, yeah, if you're a scalping trader, fine. We've got the trend monitor's red. The trend monitor's red here is transitioned. We went straight through that volatility candle. So, it doesn't always follow. But bear in mind that anything that happens on a slower time frame chart carries enormously more weight. It is hugely significant as opposed to something that happens on a 15-second or a 1-minute chart. So if you're trading on a scalping chart and you're on the 1, 3, 5, whatever it may be, and you get a volatility on 10 or 15 or whatever, that is very significant because it carries that much more weight to the market. As you can see, we're coming down to VPOC on 5, we're coming down to VPOC on 10, so it's not a great scalping opportunity, or certainly not for staying in any more than a few seconds or a minute or two, because it's probably going to congest at this region, which is what we expect to see. But there we go, that's what's happening in terms of cable at the moment. Now, let me just pull up the trade station. Here we go. Now, what was interesting, and unfortunately it's moved on a little bit from there. This is on TradeStation. This is driven by one of our interactive brokers accounts. So the live data feed is actually the data feed for the charts. So you can run TradeStation using an interactive brokers account. It's a great combination because you can trade pretty much any market you choose with IB, options, whatever you like, futures, all of it there. But you've also got the beauty of the TradeStation front end, which is a very powerful platform. And I've got the radar screen up here, as you can see. This is on currency futures. I've got the 6A, the 6B, the 6C, the 6E, the 6N, and over here I've got the 6S. This is all against dollar, remember. These are all quoted against the dollar. So the 6C is CAD dollar. It's not dollar CAD. Okay, so you just have to remember that's why the nomenclature here is a bit strange. The numbers here are a bit odd. That's why, because it's inverted, in other words. So everything you see here is against the dollar. So when the panel like this is entirely red, then it's telling you that the majors are selling off, so the dollar is being bought pretty strongly, and it's being bought pretty strongly across the complex, certainly on these faster time frames. This is 1 through 5 minute on all of these time frames, so it's being bought pretty strongly on the fast time frames. When Anna was talking, this panel here was entirely blue, and yet every other panel was bright red, and that tells you straight away the cable, yes, is moving higher, and in fact, probably pull this back a bit if I can. No, I can't on here. The pound itself was being bought strongly. It doesn't matter why it was being bought strongly. It just was at that particular point. So this panel was all blue, but all the others were red, and it just gave you a visual, clear, unequivocal signal that what you were doing if you were trading long cable at that point was you were trading against the broad flow of the market. In other words, against cable, dollar is being sold, but against all the other pairs, dollar is being bought. It's just a warning flag, and it's exactly the same principle and just before I move away, and also on here I've got the that's on trends and trend monitor, which is fantastic, just gives you that visual perspective. But also I've got the volatility trigger on here. It tells you exactly when the volatility signals come in, so you don't have to hunt around for them. This is on 6B. Where are we? This is on 6B on 1 minute. There we go. And that was 10 bars ago, which is this guy here. So we go back 10 bars. That's where the volatility trigger came in. So you get this wonderful visual array. You don't have to hunt around all the charts. And these are all linkable as well. So anything I click on here will automatically put it up over there. This is what's going on, carrying on down. Okay, we're now reaching down to the volume point of control there, and likely to come to a congestion phase, which is going to be no great surprise. Maybe able to pick all that up on the, let's have a look at the multiple CSIs. There we go, just pull those up. There we are, right. So this is basically what we had. We had this very strong buying of the pound. There we go, put it right way back, there we go. So this is basically what was happening. We had very strong buying of the pound, but everything else was heading south. So it's all very well and good. Okay, fine, you can trade that, but just be aware, you're not trading with the broad sentiment of the market. You're trading against the broad sentiment of the market. Nothing wrong with it, but you've got to be aware of it. So I just wanted to make that point. If I pull trading view over, oh, sorry, just before I do that, and now you can start to see the dollar buying. Here we are, the dollar buying, the red line, the dollar buying starting to come in pretty strongly right the way over to 15. So, you know, there's really strong dollar buying. We've got some really nice moves going on. We've got the CAD here selling off very strongly, dollar buying strongly. We've got the yen rising quite strongly too. Excuse me. So there'll be some decent moves on the yen pairs as well. Really nice moves here. This is on 5. Dollar and yen rising strongly, often do together. CAD selling off, Aussie selling off. New Zealand is a little bit against that particular trend. Very strong selling on the euro and strong selling on Swiss franc too. So there's lots going on at the moment. So I pull over trading view. Just to update you on what we're doing in terms of development. Some of you may have seen this, some of you may have not. This is basically, I've got 2 here. I think that's the other one, yeah. Okay, basically, this is radar panel. This is quantum radar panel, which we launched a few weeks ago. This is now available. It's part of the full package on TradingView. So the TradingView package, equivalent-wise to the MT4 platform, in addition to what you get on the MT4 platform, you've also got a radar panel here and also this indicator, which is the cryptocurrency strength indicator, which we developed prior to that. And alongside it, I've also got the radar panel here as well. The principles are very much based on what you saw on TradeStation. It allows you to run multiple markets. You can see all the information very quickly. I've got one set up here with Camarilla levels. The nice thing with cryptocurrencies is this is Tether basically. So everything is quoted against Tether. All these pairs, Ethereum, Bitcoin, XRP, Litecoin, they're all quoted against the red line, which is Tether. But the nice thing here is they all move together. So cryptocurrencies will tend to move together, unlike the Forex market, where you'll see obviously a lot of divergence in terms of broad sentiment coming and going through the market. In terms of cryptos, what you see is all going in the same direction. But Tether is the opposing counter currency, if you will, for the crypto world. And it really just describes it beautifully in this way. And these are the radar panels. We've included as many as we could. We've got trends, trend monitor here. We've got the trends. We've got volatility. We've got pivots, and we've also got the Camarilla levels and also tick volume over here. So what you get with the tick volume is you get the average line, the midpoint line down here, and you get the volume coming in alongside. So it gives you a straight view on whether that volume is high, medium, or low. And again, it's all very visual. So that's where we are in terms of trading view. As I say, we've completed all the development work. If you have the full package on TradingView, you will have got these indicators included free of charge. It's the way we work with everything we've always done. So invested in the full package, you will get these free of charge. If you haven't, just drop us a line and the guys on support will sort that out for you and add them to your TradingView if we've got your username, which I'm sure we will have. So let's just pop that out of the way. Let's just go back onto the charts for a moment. That's the CSI. Now, just going over onto the currency matrix. Where are we? And this is where I just want to show you something else, which I flagged up the week before last. Currency matrix, one of the questions we get is, what's the difference between currency matrix and currency array? And it is primarily one of application. I click on there. Right. What that tells you right now is that on the 1 minute, the euro is being sold off universally. That's it. There's no divergence. It comes back to the point I was making about the cable. It was in complete contrast to the broad sentiment, the broad river of flow in the market. The euro, as you can see here, it was okay. It's just flipped. The euro Swiss has flipped up a little bit. We had a perfect complement. We had a full house, in other words. Just see what it's like on 5. Okay, you don't expect to see exactly the same thing. If this sentiment here, this sentiment of euro selling that we're seeing down here continues over into 5, then you will see these start to migrate south. Let's see what's happening on 10. Similar sort of picture. The heaviest selling is euro dollar and euro pound. No great surprise. Over here we've got euro dollar, euro pound, euro dollar. Where's euro pound? A little bit higher on this one. Let's just have a look on 15. There we go. So what you're looking at constantly with the terms of the matrix, it's very much close to the market. And the reason it's close to the market and very different from the array, if I go in here and pull up the matrix and look at the look back, the look back period on this is 7. Okay, and I'll show you currency array in a minute. So this is very close to the market. This is much more of a scalping tool, and you can think of it in terms of exactly the same relationship that you have with the trends indicator, the little dots, and the trend monitor. The trends indicator works very close to the price action, and it shows those changes in sentiment very quickly, whereas the trend monitor takes a much more considered view. It steps back because it's looking at a longer period, and it's precisely the same here. So that's on the matrix. Just put those back onto full house. There we go. And if I just pull up the currency array, because people say, well, why does the currency array look different? I expect the currency array to look the same. No, you don't, because it's looking at a much slower time frame. I've got this on pound. But if I click on the indicator again, and you'll see what I mean on inputs, look back rather, the look back is 80 up here. So this is taking a much more considered view. This is taking a longer term perspective on what is going on. Yes, the euro is still selling off here. Let's just flick up the euro, but it's not at quite such an advanced stage. You can see the euro Swiss is sitting up here. Everything else is down here. The beauty of the array is that as you watch it, these will sweep up and down in this joining the river, if you like. The river of sentiment, the river of flow is building as the market sells or buys a particular currency. And if it's universal across the complex, then For the euro, again, it's like the yen pairs. It's very easy to see because the euro is the primary currency in each case. So if the euro is being sold, or if it's being sold strongly, you expect to see these all down here. The weakest is down here, the euro dollar, followed by euro pound, euro yen. But essentially, you want to see this guy join, these move lower, to see what's going on 10 minute. Similar picture here, and up onto 15 for euro. There we go. As an isolated out. There we go. So we're seeing, a broad. This is a broad picture. This is a landscape canvas, if you will, of what is going on. And then if you go back to the matrix, your scalping tool, you're really down at the coalface with that particular indicator. So let's just pop those back on again. And then finally, just to complete the picture, which we don't talk about a great deal, but let's just pull up the currency heat map. The currency heat map goes to another level, because what the currency heat map is showing you is two different things. First of all, within the cells here, these different time frame cells, and remember on TradingView, the unique of TradingView is that you can actually set these to whatever time frame you wish within the 5-cell combination. You can't change it on NinjaTrader. We are now focused on NinjaTrader for the next few months. We're in the process of working on the control panel to port across all the indicators into control panel. So you will have a similar sort of setup as you have in radar panel on TradingView and radar screen on TradeStation. So you'll have a really nice way of managing those charts with all the indicators, our indicators on the market analyzer itself. So it will be enormously helpful to managing multiple timeframes and managing multiple markets. But at the moment, we will check this to see if we can actually change timeframes to make it easy. But we can on TradingView, we can't at the moment. So what you're looking at here is these timeframes, and you're looking at the bullish or bearish sentiment in terms of the cells on each of them. So you've got a complete visual perspective on what is going on across all the timeframes without having all the charts open, which is fine. The other aspect to it is that the ranking ladder down the side here is very different to currency array and very different to currency matrix for one sole reason. And that sole reason is that these are weighted, and they are weighted according to the time frame, because a 1 minute time frame will be less significant weight than a 5, and a 5 will carry less weight than a 10, 10 less than 15, etc., etc. The greatest weight will be carried by the slowest time frame, the least weight by the fastest time frame. So what you will find is that these currency pairs on this ranking ladder will move much more slowly than either the matrix or the currency array, because they are weighted. So if you are trading timeframes of daily or even weekly, this is a very helpful indicator, because it gives you the strength of the sentiment across the time horizons, but it also gives you opportunities to look for pairs which are up and down at the top and bottom of the charts. In other words, reversal opportunities, where the Aussie, for example, Aussie dollar, Aussie CAD, might be a reversal opportunity to the bullish side. Dollar yen, maybe CAD yen, some of these guys up here will be looking at an opportunity for a reversal to the downside. Clearly, with the dollar buying, that's the reason the dollar yen is up at the top there at the moment, but that's not going to be forever. So I just wanted to make the point that when you're using these indicators, you've got to be aware of how they're constructed and what their purpose is, because they all have a slightly different purpose in the game of trading. Let me just go back onto the charts again. There we go. Okay, so we got a little bounce here. What do we expect? Well, we saw it coming in here. As I said, we get down to the volume point of control. Was this a good short opportunity? No. Why? Because it's coming down to volume point of control. You expect congestion. You're getting congestion. You've got to pivot to the bottom, and you've got a nice amount of volume coming in. So there's some buying coming in here. And it's probably not going to go far based on this candle, but above that you've got a lot of price-based resistance ahead. You've got this here, you've got some decent volume sitting in over there as well, and generally speaking, the market is bearish in terms of majors at the moment. So it all comes down to what you're trying to do all the time. You go down to the 1 minute, Would you take this as a little scalp? You've got some nice buying coming in here, a little bit of a congestion, a doji candle coming in here. Volume is rising. Price is rising, but volume's falling away. Weakness coming in on this one. You've got volume going in here. It doesn't look terribly strong. Again, three candles here. Is this a strong move? No. Why? Because the volume's falling away. You've got rising price and falling volume. What does that tell you? It's an anomaly, because if you understand Wyckoff's laws, the principles of Wyckoff's laws, then rising markets should be associated with rising volume, and falling markets should also be associated with rising volume, because it takes effort to go up. We're all familiar with gravity, but it also takes effort to fall, because if a market is not being associated with rising volume, in other words, heavy selling coming onto the market, it's not going to fall far. And it's exactly the same principle in a rising market. You've got to see effort going into the market for it to actually have some momentum. And the same is true in a downwards move. It's exactly the same principles apply. And what also applies is, I'm looking at this chart, we're on a 1 minute chart here. VPA applies in exactly the same way, whether we're looking at a 1 minute chart or a 1 month chart. It's exactly the same. And if you have a platform that's got fast time frames and you're learning VPA, then it's a great way to learn. Go to a 1 minute. If you can go to a 15-second or 30 seconds, even better, because it's so much quicker. You don't have to wait for all the candles to build, obviously. There you see the euro selling, very, very heavy selling on the Swiss franc as well. And this is the dollar buying on the 10 minute that we saw earlier on as well. Finally, I'll just pull this over again onto Trading View, because I've got them set up somewhere or the other. This one, there we go. This is on the 4 indices, which are available on all the platforms. This is on the pound index. So that's what the pound is, broadly speaking, doing. It's it's trying to rally at the moment on 5. This is the yen. That's what the yen is doing, going sideways right now on 5. Bottom left, we've got the dollar. We're seeing this punch in volume higher, and that's the euro, which is being cattled, selling off heavily. And all of these come with 2 moving averages on as well. So, it's moving strongly to the downside. Right. I've gone way over time. I think I'm going to wrap it up there, if I may. Sorry, I have the chat box closed all the time. Beg your pardon. Okay, I think we probably answered. We're probably answering independently. Are you talking about MT4, MT5? No, Anna's the Think Markets is on MT4. Whereas originally you used to have to go to MT5 to find a lot of these things. Now what you are finding now is a lot of the brokers are starting to introduce them, these associated market stocks, indices, and it's great to have the VIX on there as well, because if there's one chart you need to have up somewhere, it is the VIX. If you haven't got it on your brokerage account, if you haven't got it with investing.com, just go to investing.com and you can pull it up there. You've got to have it somewhere, because it is the indicator for sentiment. On the heat map, is the month period the last 25 trading days? Gosh, I don't know, Christopher. The answer is the straight answer off the top of my head. I'll have to go and check that for you. I can't remember what it's set up to. I can go and have a look. I'll tell you what, I'll drop it on email for you. Go and check it out, save wasting time. I'll go and check it out for you and let you know. No problem at all. Okay, there we go. Let me just move that back out of the way. There we are. As I say, we are working flat out on NinjaTrader now. I haven't got anything to show you yet on Market Analyzer, but we will in due course. Once we've done Market Analyzer and all the indicators, and just as an aside, there's a nice bit of weakness coming there. Sorry, my eyes are always drawn to what's going on the chart. Look at the volume spike there, big volume spike, lovely. Nice wick to the upper body, little body, nice big volume. Where's it going? Answers on a postcard. What was I saying? Forgotten now. Oh yes, NinjaTrader. We're working on NinjaTrader 8. We will have to make a decision about what we're doing in terms of NinjaTrader 7. I don't have any concrete idea or views on that at the moment. Obviously, what we don't want to do is put in a huge amount of effort to NT7 and then it's no longer supported by NinjaTrader. I have asked if anyone's got any inside information on that. It'd be much appreciated. So as I say, at the moment we are working on NT8 for the time being, so that's going to take us certainly a few weeks, if not a couple of months. And then we'll have to make some decisions about MT7. Right, where can you find all the indicators? You'll find them here at quantumtrading.com. MT4, 5, NinjaTrader 7.8, TradingView, and TradeStation. The TradeStation I had up was TradeStation 9.5, which is the relationship with interactive brokers if you have an IB feed. And of course, we also have the TradeStation 10 and above, which uses the generic TradeStation feed itself. Fantastic platform and really powerful with radar screen as well. If you buy one or more indicators from us, fantastic. You will always get a credit. If you buy one or two and it doesn't matter when you bought them. We have customers going back to 2012, 2013. If you bought then and you've got a couple of indicators and you want to upgrade to something else, absolutely fine. You will always get a full credit in the future. For your upgrade to whatever platform or to the education program, makes no difference. And bear in mind, if you invest in the full program with us, whatever the platform, you will automatically receive all future indicators. We are developing some new indicators for NinjaTrader 7.8 as well. So if you have the full package there, you will get those in due course also. And it includes 24/7 support, includes all upgrades. You never pay us another dime. That's it. It's just a one-off fee. This is Anna's site, annacooling.com, where you find all the books, all up on Amazon. Very popular, I have to say. They do sell extremely well, both in Kindle, and you'll find them in paperback versions also there, with all the links to all the various sites and the analysis down the left-hand side here too. Finally, over onto the education program. This is Quantum Trading Education. It's called the Complete Forex Trading Program because it is just that. We do joke about the number of slides in there, but essentially it breaks down into something like 450 odd lessons and something like 200 plus hours of video. It's comprehensive, to say the least. And it just teaches you all you need to know to trade this market with complete confidence. And in addition to that, what we bolted on last year was the opportunity to trade the funded program. You're not trading your money, you're trading our money. There is a cost of entry. There's an entry ticket, if you like, to get into the program. Once you're in the program, that's it. You cannot lose any more money than your entry ticket because you're trading our money. You keep your money to your own account, that's fine. You trade ours. Yes, of course, there are rules. There are risk and money management rules, but essentially you start with an evaluation count down the bottom here, either $5,000, $10,000, or $15,000. You decide where you want to start. And it is like a trial. It's with real money. You're not trading a demo account here. You are trading real hard cash. And but it's not yours, and it's for you to establish that you have the consistency that you need in order to succeed. And once you've proved that consistency to yourself and also to us, then what we do from there on, and basically you receive some of that profit back that you make in terms of a single payment, 35% of it comes back to you. We then multiply the levels here by 4. So if you started with a $15,000 account, we will give you an account with $60,000 in it to trade at the next level. And in addition to that, you can also trade these additional markets. So you will have access to the indices, European indices, and also gold. On the evaluation level, it is restricted purely to the 28 currency pairs because we want to keep it to that level as you get started. And thereafter, we multiply the account size we double it basically. So if you started at 15,000, you go up to 60,000 on the first level, and then we double it thereafter. So you go 122, 44, 80, right the way through on up to $1 million plus and 2 million level. You earn as you go. Once you move up onto the portfolio manager stage, then you start to earn at 50% kickback rate, and you can call that off whenever you wish on a monthly basis, however much you wish. And at the $2 million account, it goes up to 60%. Again, you call that off on a monthly basis or not, or you just leave it in the account. It's entirely up to you. The reason we added the funded program is very simple, because we wanted to give our students the opportunity to put that expertise to practice. to actually benefit directly in two ways. First of all, yes, to earn some profits, but secondly, and I think more importantly, is actually to give you the confidence and also the sense of trading much larger sums of money. It's fine trading small amounts of money when we're down, in the micro level, absolutely fine. But at some point, you have to move out of that environment and start trading much larger accounts. And this is just a way for you to have access to much, much bigger sums of money, but actually not to have to carry the risk of trading those large sums of money. Yes, there is a floor of risk, but that's down to us. As I say, when you join the program, you just pay the one-off entry fee. That's your entry ticket. Once you're in, you're done and dusted. You never pay us another dime. You carry on trading and you carry on up through the levels. The evaluation level, you have 12 months to complete. Thereafter, there are no time limits whatsoever. So I hope that covers everything for you. Thank you very much indeed for coming along today. Hope you've enjoyed it. Sorry we've run over time a little bit. We are back at 3 o'clock, I think, with the stock webinar. So we will see you then. As I say, thanks very much indeed for coming along today. See you soon. Enjoy the rest of the trading day if you're not coming along later, and the rest of the trading week. Stay safe. See you soon, and bye for now.